Today we're talking about excise tax. An excise tax is a per unit tax imposed on producers rather than consumers. And the goal of an excise tax is to make less of the good that the government deems dangerous or unwanted. Sin taxes are placed on products that the government deems dangerous and very addictive. The government also does this to maximize profit. Since they are addictive, the product becomes relatively inelastic, so a price change will not affect the demand as much.
Okay, so we're going to have an example for you guys. So government sets a $2 per unit tax on cigarettes. So this is our first supply line, okay? And then this is the new line after a $2 tax. Okay, so our first equilibrium was at $3 and at 100 cigarettes, or 100 units. Then, hold on just a second. Now, our new equilibrium is at $4.80 cigarettes. So, now to find the total tax revenue, you go from the bottom of the supply line all the way over, and then you go up to the new equilibrium, and this is our total tax revenue. Okay, now that total tax revenue gets split into two parts. We have the part where the producers pay, and then we have the part where the consumers pay. Okay, and now, almost done.
Go.
Okay, this part, this whole blue box is the total firm revenue. Against it. Okay, the part that the government gets is this whole black box right here. Right there, the whole thing. Okay.
Excise taxes can be found in the modern day all over the place. For example, in Illinois, the gas tax just went up by 19 cents. This affects many people, especially students, because gas is a necessity to get to and from work and school.
Yes. So, as the elasticity of demand goes up, consumers pay more. Okay, now we are going to talk about dead weight. So, we have a graph, and it's about tax on cigarettes again. We have the quantity, and we have a price. Now, we have a supply line. It's going to be a very basic supply line. Now, we have a supply tax line. So this is a new line based on our, let's say, $2 tax. So, and then we also have our demand line right here. So now, once we calculate it, we have our new equilibriums. Here's our first one, but here's our second one. And then we have our total tax revenue, and we already learned how to find that earlier. Then we split it in half, producers, consumers, right? But now we have dead weight. This triangle right here is all dead weight. So that means nobody gets it.
Okay, now it's your turn. Take some time and pause the video to solve all these different calculations, and we'll go through it together. Okay, so first we are going to calculate our tax per unit, and this, in my eyes, is the easiest one to do. So right here, we're going to take the point where the quantity is 0 in our supply tax line, and the point where the quantity is 0 in our first supply line, and we're going to find the difference of them. So we know that 11 minus 8 is 3, and so the answer to our first problem will be $3. Next, we're going to find the total tax revenue, and to do this, we need to recreate that box we made in an earlier practice. So to do this, you go to your new equilibrium and draw it down to your old supply line. After that, you want to draw the line across and then close the box up top. And now we want to find the area of this box. And so here you can see that it is 3 up and 10 across. So to find the area, of course, it's 3 times 10, and as we know, that is $30. Now it's time to find the amount of tax paid by consumers. Now to find how much the consumers and producers pay, you want to go to your old equilibrium and draw a line across here. Now, to find the amount paid by consumers, we look at this top part here. Now we can see the difference between 12 and 14 is 2, and again we have a quantity of 10, meaning that the amount of tax paid by consumers is $20. Now to find the amount of tax paid by producers, we do just about the exact opposite. We take this bottom part, this is the part paid by the producers, and now we see that the difference between 12 and 11 is 1, and again we have the quantity of 10. So 1 times 10 is that $10. Now to check yourself, you want to make sure that the amount paid by consumers and amount paid by producers always adds up to the total tax revenue. Now we're going to find our total expenditures. To find the total expenditures, you want to take that top of the box of your total tax revenue, draw a cross, and now you just want to go all the way down to the bottom. And now the area of this little rectangle that we made here will be our total expenditure. So it's really easy, you just go 14 times 10, that's a really easy $140 for our total expenditure. Now we want to find our total revenue for firms, which is really easy. So you just want to find the area of this bottom block right here. So we have a height of 11, and again we have that quantity of 10, so we want to add that up to get a nice $110 for our total revenue for firms. Now a way you can check this is you want to take your total expenditures minus your total tax, and you should come out with your total revenue, and in this case we have 140 minus 30, and that does in fact equal 110. In review, an excise tax is a tax placed on producers rather than consumers, and there's a few reasons that the government would place these taxes. The first of which is to reduce the production and selling of goods that the government deems dangerous, unwanted, or environmentally dangerous. There are a few products in particular that the government would place these excise tax on when they're deemed dangerous. So these being cigarettes and alcohol mainly, and these are called sin taxes. Again, the sin tax is placed on items that are deemed dangerous to either people buying them or environmentally dangerous. There are a few effects of the excise tax that are worth mentioning. First off is the lower quantity supplied. Of course, the goal of the excise tax is to lower the production of a certain good. The second being a higher price. Since the tax is put on producers, they have to raise their prices to continue to make a profit. Third is obviously government revenue, because most of the money that is being added when there is an excise tax is going to the government, obviously excluding the dead weight. And the final being lower quantity demanded. Of course, due to the raise in price, less consumers will be willing and able to buy the products at that higher price. There are other products other than sin taxes that the government will use to maximize their tax revenue, and these are being necessities. The government places taxes on these because they are the most inelastic products, such as gasoline and sometimes medication. Because obviously people need gas to get to and from work and school, and obviously people need medicine, and so that makes them more willing to pay at the higher price because obviously they need the product. This leaves the ultimate question: who is paying more of this tax, the consumer or the producer? Well, as the product's demand gets more elastic, the producer ends up paying more of the tax. So that means when the product's demand is perfectly elastic, the producer pays the entirety of the tax. And of course, on the other hand, when the product's demand is perfectly inelastic, the consumer ends up paying the entire tax. And finally, if the product's elasticity is unit elastic, then the tax burden would be shared equally by both consumers and producers. Going back to our example problem here, we can see that the producers are paying less than the consumers, meaning that this product, you could say, is relatively inelastic. So this is another way for you to figure out if a product is inelastic or elastic with some easy steps.